You're talking with that seller, you're on the phone with them, you're talking about doing a subject to. They tell you that I can't do that. I need to be able to buy another home in the future. I can't have this mortgage sticking around my name, preventing me from getting another mortgage. I'm not going to be a renter forever. I can't sell you sub two. I need to not have that hurting my DTI. That means debt to income ratio. So it's a very enlightened seller when they have that. A lot of them don't have that epiphany. And depending on how motivated they are, they might not worry about it. When they're going to foreclosure in a week, they're not super worried about buying another house anytime soon. So it does depend a little bit on the situation. But let's say we've got that foreclosure lead that's coming in. They're giving you this roadblock, this hurdle. Hey, Mr. and Mrs. Seller, more than logical, and that's a great question. I want you to be able to do whatever you want down the road. When would you like to buy another home? Obviously, you couldn't right now if the foreclosure were to happen. But when would you want to buy another property? Oh, I'd look to do that in 6-9 months, maybe a year down the road. Let me get some things ironed out. Well, that's flawless and that's perfect. That's exactly what we'd want you to do. Right away, it would be a little bit more challenging, but if you wait 9 months or a year, you shouldn't have any too much of an issue in getting a new loan. What happens down the road when you do go try to qualify? They're going to see this loan pop up. That's when we send that lending officer, that loan officer, originator, the information of, hey, I sold that property subject to. We have a third-party loan servicing company that's been making the payments. They can provide documentation showing that they've been making that payment on that underlying debt. You haven't been the one paying it, from bank statements to an official letter from the loan servicer. This is one of the reasons we work with the loan servicer, to be able to make it easy for you, Mr. Seller, to later go get a loan. So they prove that you haven't been paying it, that you sold the property. It doesn't remove it completely from your credit. Lenders will vary how much they make it affect your credit. On average, it's about a 25 to 30% of that outstanding principal will still be applied to your debt. So let's say there's $100,000 on that mortgage, 25 or 30,000 will still affect your DTI. They don't completely wipe it away because you do have some responsibility for it, but they do allow you to go through and get another loan. And all our years of doing it, I've never had somebody that would qualify for a loan if the sub 2 wasn't in place, not be able to qualify because it is in place. The only time it hasn't been able to work for me is when the seller was later trying to get another property. They actually had a car note that they hadn't been paying on for 6 months and then tried to get a mortgage and they got denied. So there are other factors that come into play, but if they overall have good credit and they have been getting things back online, they shouldn't have a problem being able to get a new loan. I can't guarantee or promise it. Lending standards change all the time. It's the same reason that you could take your loan application to 6 different lenders. You're going to get 5 to 6 different interest rates and quotes and lending costs and all the little details. Things will be different because they all have different standards and criteria that they match through. Not all lenders understand how this works, but some lenders definitely do. Many people, myself included, have multiple mortgages in our names, both personally and definitely professionally. A lot of landlords have personal loans that they've taken out against assets that are rental properties. That's very common in the way people have built up rental portfolios. So the lenders understand, oh, that's just basically looked at like a rental property. You don't actually make it. You have cash flow coming from that to handle that debt. So being able to articulate that with your seller, having a loan servicer in place, or you've established the relationship where they can provide that documentation, being able to set that correct expectation with them. This is another opportunity that we use to build a strong relationship with our seller. And we tell them, hey, Mr. and Mrs. Jones, we have a long-term partnership. This is a relationship with us. So I want you to reach out to me in 5 years, 10 years, whenever you have that loan that you're trying to go get for a new property. Give us a call. Let us help you with the documents. In case you've lost everything, just let us know. We have the copies of what you need. We can help get the letters that you want to show where those payments have been coming from on that loan. I can also tell you from seeing it done hundreds of times, we have reinstated loans that are going to foreclosure, properties that were behind on their note. And all of a sudden, these people 9 months, a year later are getting countless credit card and loan offers because your credit score does come and bounce back up. Even better than paying off a loan that's behind, as far as credit score is concerned, is maintaining those payments over time. Your credit score is really an ability to maintain ongoing debt versus paying off debt. A little counterintuitive, but it's not about paying it off because they know if you paid off that mortgage, you just sold the house. You aren't the one holding that debt. So by making that ongoing payment, their credit score will start to come up. And so you can tell your seller that, look, you're going to have a higher credit score down the road. We will help you handle the paperwork when it comes up. It will still show up. I'm not going to tell you that it won't. And it will still affect your DTI, but we will help you overcome that, and we will help that become something that doesn't prevent you from getting your next home. There are a lot of ways to explain things and work with your sellers. They get complex issues, but probably the best is through a story. You can explain anything through either being company policy or a story that you've seen firsthand about how this has worked. Whether it's actually your firsthand story or someone in your network that you know of the story that can vouch for it, explain it, or provide more information. Make a way to explain the process to them that they can quickly follow what's going on. A confused mind says no, so make it super simple and easy. Just explain what you can. If they have further questions about it, say, hey, that's a great point. Let me continue to work with my larger network of people that have been doing thousands of transactions and help you get a good, consistent, accurate answer to that information. One of the most important things in this whole thing is to set the right expectation. Don't overpromise things to your sellers. That will always bite you in the butt later. Be accurate and set the standard up front. If you have questions about real estate investing, owner financing, or any other aspects, don't hesitate to shoot us a message or make a comment on a video. Don't forget to subscribe to our YouTube channel and follow us on the other social platforms to stay updated on the ever-changing real estate market. Happy real estate investing!